All right. Oh, there we go. Split screen. So, Greg, thank you. So we better explain the fact that you have a red jacket hoodie on. You and I don't know each other that well, and you certainly never taken an economic interest in red jacket or been paid by us. But you are wearing
Well,
our hoodie, so thank you.
yeah, now mine looks a little lighter red, almost pink than yours, but they
Yeah.
should be the same. I guess my camera's not quite as good as yours, but
Well,
yeah, so thanks for dropping this off yesterday. This is a nice looking sweatshirt.
well, it was fun to stand in your kitchen for half an hour and learn more about you. And I was already going to say this, but I'm going to say it with more emotion now. Thank you. You're doing an unbelievable service to the world. And I know that sounds a bit inflated, but it's true. So for the context setting here, I've just learned in the last year that sound money is correlated with human flourishing, right? Okay, so we're going to unpack that. And Bitcoin is the soundest money ever. So Bitcoin should be synonymous with human flourishing. And that's not the case right now. There's a lot of noise out there about volatility and FTX and all this stuff, but that's going to all work itself through. And then at the end of the day, it'll be people like you, and there's only a handful. You've been out there on the circuit, unpaid, talking about the merits of this for years. And I know, let's just do this financial disclosure. You don't need the money. I know that. You've had a great career. So you're not doing it for that. You don't get paid for this. It's amazing to me. And you're doing it because you are a teacher at heart and it's for the good of the planet. So I really want people to know that. I adored you as I've been stalking you in the last year. I think there's a handful of guys making beautiful things, which is you and Jeff Booth and Mike Saylor. And I don't know the rest of the guys you do. And then just this morning, to make sure I was up on you, I see that you went to Madeira to talk to
Yeah.
the president of Madeira. I mean, gosh, it's so beautiful. All right, so thank you is what I'm trying to say. And the second thing is, so let's tell people why you. And I love this idea that you're 30 years as a risk manager and you're not 30 years old. You're 30 years as a risk manager, which means something, right? You've been close to risk. And there's few people in the world that are in that position. So you're going to talk about that. And finally, and I'm going to turn the whole mic to you, I hope, for as long as you want. Our audience today, you hang around people that know this story. And now, it was just a year ago that I read the Bitcoin Standard, thanks to my nephew. I said to my nephew, he's a really smart guy. I said, what are you reading? He says, the Bitcoin Standard. I said, oh, good, because I read Tapscott's book and I have no idea what Bitcoin is. So I read the Bitcoin Standard and I realized, oh my gosh, how did I not know this? How did I not know about all of this, what you're going to call the Ponzi scheme of fiat currency? And as a way of political announcement, I won't speak for you, but you can agree if you do. There's two parties. To me, they're like choosing between corn pops and Skittles to determine whether you should have that for breakfast. Like it doesn't matter. There's a bigger issue here, which is human flourishing. And now to finally set the context and be over to you, I want you to talk about, as my beautiful mentor, great human being, Johnny Drake says to me, stop working so hard, stop trying to outsmart everybody. Once or twice in your lifetime, you're going to get an asymmetrical bet. And when you do, go all in. So I know you believe, know that this is the best asymmetrical bet you've seen in your 32-year career. So I'm going to stop now and guide you if you need it, but I doubt you will. So there you go. Over to you.
Well, firstly, thanks so much for having me, Dave. We did meet over in Edinburgh, and let's start by saying one of the benefits of me, traveling to various places, mostly on my own dime. When I say mostly, I don't have to pay to go into the conferences, so I feel like that's a benefit. I get a free ticket. Sometimes there's some. For example, when we went to Bulgaria, just after Edinburgh, the young man over there, his name is Plamen, put together the greatest trip I've ever been on, organized by a non-professional tour guide, which was him. And I just must say, traveling around Bulgaria with Jeff Booth was worth the entire price of admission that I've paid to the Bitcoin community, which is, traveling around mostly on my own dime. And the reason I do that is quite simple. Firstly, I'm passionate about Bitcoin and its ability to change the world. That's no question. I have 3 children. My goal is to leave the world in a better place than it is or was when I arrived here almost 60 years ago. And certainly a better place than it is today, because the world's a worse place today than it was when I arrived in the world 60 years ago. And that doesn't make me happy, because I have 3 kids, and that's who I want to give back to. And I get to meet people like you, which is amazing. I get to meet people like Jeff Booth. I get to meet the president of Madeira. I mean, how cool is that? Like, I never would have gone to Madeira if it wasn't for being invited there. And Madeira is absolutely beautiful. I'll just say that it's, it's like Hawaii in the Atlantic. It's very similar geography. It's a volcano that came out of the Atlantic Ocean. It's got great surfing, great climate. It is off the coast of Africa, but it is a territory of Portugal. And it's I got to spend time there with guys like Obi Nwosu, who is starting a project in Africa. He's a Nigerian, born in Nigeria, lived most of his life in London, England, but is doing some great stuff on the continent of Africa with Bitcoin on a protocol called Fedimint. So all of these things, I really appreciate your shout out. All of these things are just part of my desire to give back. Okay. I have done okay. Yesterday when you were over at my place, we started talking about this guy, Mike Weckerly, who was my business partner in a former life. And not a former life, but just a former business. Weck and I managed money together at a hedge fund, and he is one of the greatest guys on Bay Street. He's a anomaly on Bay Street, because believe it or not, Weck is a giver. And having spent my life on in the financial markets in New York, living in New York and trading mostly with New York, although living mostly in Canada my whole life. Look, there's not a lot of givers on Wall Street or Bay Street, okay? It's a very taker mentality, zero-sum game. If you win, I lose. That's typically what happens in a trading arrangement, zero-sum. But bigger than that is, it's sort of where people go because they want to get rich, which is fine. That's capitalism, but it becomes almost a jungle mentality. So the flip side is Weck. Weck is a giver. That being said, in the world, there's only, even in the good world we live in, most of the world are still takers. And so I would guesstimate, this is me saying 15% of the world are givers, 85% are takers, or how about we say 15% are givers, 35% are on the fence, and 50% are takers, okay? And then on Bay Street and Wall Street, it's like 99-1. It's not even close, okay? It's actually pretty gross when it comes right down to it. It's a bunch of egotistical, spoiled little rich kids. They all went to Ivy League schools in Wall Street. I went to the same Ivy League school, even though I'm a Canadian, or an Ivy League school. They put their pants on one leg at a time as well, most of them. There's nothing special about them. Now, I don't begrudge them for going to Wall Street to work. I mean, tend to follow the money, but they get polluted aspects, and it's all built around this thing called the Fiat Ponzi. So we'll start with this.
Well,
they don't teach you.
One more shout out to Weck there, because I know you guys, when you say you traded or that you've managed risk, there's real traders and there's everybody else. So a real trader looks at his screen and sees no bid for a gigantic position he's got on and wants to actually puke. So that's what we call it. We call it the garbage pail test. Have you wanted to puke in a garbage pail because you've got so much risk on? That's a very small percentage of people, and I know you're one of them, and I know Weck's one of them. And when you tell me he's a giver, that's beautiful. I think it was Conrad Black that said a sort of epitaph that I want on my tombstone, which is, he's got the balls of a cat burglar. Can you imagine having the balls of a cat burglar? Like,
It's
go
pretty
into
funny.
somebody's house in the dark of how much falls, including stupidity. But so that's the sort of courage it takes. So good on you for all that. And you guys created a lot of wealth for a lot of people, which is beautiful. And you know what? We joked last night about fat, old, and white, and we'll leave present company aside. But the point is, that's why you're credible to my audience, to this audience, is you're one of us. You're not on that screen on the YouTube with some thumbnail that looks ridiculous saying it's going to the moon. I mean, you're a real guy. So sorry to interject. Over to you.
No, I appreciate that. So look, all true, everything you said. Have I ever wanted to puke? Yeah, I actually have wanted to puke many times. They used to ask me when I was young what I loved about trading. And I started my career as a what's called a sell side trader. I traded using the bank's capital. I traded high yield bonds. And you talk about illiquid markets where things go no bid and offered without, same thing as saying no bid, and you own a big position and you feel like puking. I'll take it to an extreme. Well, they asked me when I was young, what did you like about that? And I said, when you go and you play a big sporting event, so I grew up playing sports, I'm pretty sure you did too. You go into an opposing arena or even your own arena, but you have butterflies in your stomach. That's a pretty cool feeling. I felt that way my entire trading life. I would know how I did at the end of any single trading day. It's a profit and loss, win or lose, that type of scenario. I like that until it builds on you to the point, and I mentioned this to you yesterday. I had to put my hand up and end my career because it actually became life encompassing, where I was I went into a deep spiral of depression and anxiety. It was partly due to my work, partly because I'm a very competitive guy, but partly also because of non-work circumstances. Anyway, coming back to that though, yeah, that's what makes capitalism is a jungle. It's supposed to be. The trading floor is a marvelous place. It is the jungle. It's a rowdy arena of type A personalities, both men and women. Incidentally, as a shout out, the best traders I've ever met in my life happen to be women, not men. Okay. Really? Because they're actually able to put their egos aside in a lot of cases and get the market and let the market take it to where it is, rather than try and put their stake in the ground and die on a hill that they shouldn't be defending. Right. Because, you can't be the only buyer. Anyway, long story short, I've done all of that and I feel it's time to give back. Now, let's hit on something you said. Okay. Yeah. Firstly, yes, it is a Ponzi, the Fiat Ponzi. I don't say that lightly because I'm a capitalist. I'm a freedom lover. I love capitalism. I love freedom, but there's a problem with the fiat system. Okay. Remember that. There's a problem with the fiat system. And the second is, yes, asymmetric trades or investment opportunities define careers. You will only, I believe the friend of yours mentioned is the guy that owns Redtail. If I'm mistaken, tell me. But anyway, if it's him,
you got it. Yeah,
I love it. I love it because I believe as well. Firstly, I'll say asymmetric trades or investments define careers. And secondly, you'll only get a few of them in your life. I've only had 3. And Bitcoin is the best and most exciting opportunity that I've ever seen. And remember this, when you have it, he says, go all in. I don't say go all in. Okay. I just say you got to own more than 0, because Bitcoin's actually an IQ test in risk management. Okay. Remember what I said. Bitcoin is an IQ test in risk management. And if you outright say that Bitcoin is not worth having in your portfolio, it's my opinion that if you've actually done the work, and I've yet to meet anybody who's actually done the work on Bitcoin that can look me in the eyes and say, it doesn't belong in my portfolio, either from a long position or a short position. Because if you're such a cowboy and you're certain it's going to 0, step up to the plate and short it. Okay, mister, you're so smart that it's going to 0. Put your money where your mouth is. And I dare you to short it. Okay, because it has 100 times upside and 1 times downside. And that's not something you short. You own it as insurance against the system that you already have all your eggs in one basket. And that's called the fiat system. So approach it as a risk management exercise. I believe it has asymmetric return to the upside, such that you don't have to own more than 5% of your net worth in Bitcoin to participate in the beautiful asymmetry to the upside. And if you don't own any Bitcoin, I think, and I can prove it to you, you're taking more risk than if you own a proper portfolio allocation. So if you're so smart and you believe what you read from Nassim Taleb and Jamie Dimon, and you haven't done the work, well, you're listening to conflicted people giving you the wrong advice, okay? Wall Street is conflicted. They don't want Bitcoin to succeed, very simply because when it succeeds, it will disintermediate Jamie Dimon from JP Morgan out of business. It's very simple. Show me the incentive. I will tell you what people will say. And it's the incentive of Jamie Dimon not to see Bitcoin succeed. Why? Because he benefits from the Fiat Ponzi. So maybe what we can do is define why I think it's a Fiat Ponzi, some of my career, if you'd like. I'll also tell you, I'm open for discussion. I'm always trying to learn. And if people can convince me that I'm wrong, I'm willing to change my positioning. That's what a good risk manager does, okay? A good risk manager will always read research that is contrary to his or her opinion. They don't need confirmation bias to say, oh, you're so smart to own this. You should read research that tells you you're a knucklehead if you own this or don't own this, okay? Because why? Humans like confirmation bias. They own a stock. They love reading buy reports on that stock. They never read short sell reports on that stock. That's human nature. Not the way to manage risk, people, okay? So keep an open mind. We can walk through my career. I have about another hour, if that works for you.
That's beautiful.
From this point, I don't want to belabor it. And if an hour is too long, cut me off. But here's what I know. Living for 35 years in a risk chair, I need to tell you how I got there. And the first way I got there is as an engineer. So I went to McGill University in Montreal, my hometown, and I went to McGill to play sports, but I was good enough to be an engineer. And I figured, you know what, Foss, stay in engineering, because even though I knew I didn't want to be a full-time engineer, you can always switch from engineering to business, but you can never go from business back to engineering without losing all your time and your credits, because they're not transferable. They're only transferable from engineering to business. They're not transferable from business back to engineering. It has to do with all the mathematics and the specialization of the courses. Anyway, found myself after 4 years at McGill. Oh my God, I actually completed 4 years in engineering, but I don't want to be an engineer. What the heck am I going to do? And I was lucky enough to apply to one business school in the United States and a couple of business schools in Canada. And I got accepted at Cornell University in the USA. And I never would have been accepted at Cornell if I hadn't been Canadian. In other words, I had the good enough marks in engineering as undergrad, but if I was a US student, they would have asked me to go out and get 2 years of work experience at least before I came back and was able to attend the university's business school. But Cornell's an Ivy League institution in the US. They were trying to build an international business program. And I guess I slipped in as a Canadian because here I am, one of the youngest kids in the class. I live with a great group of undergraduate kids at Cornell, including one who was killed in the World Trade Center in 2001. Okay, so I've experienced the US way of life. I've experienced their culture. I went to a good school. 1988, I graduate from Cornell. And I want to take on the world, okay? I could have gone to Wall Street, but I decided to come back to Canada. And I come back to Canada and in fact, get a job at the head office of the Royal Bank of Canada in Montreal. So Royal Bank of Canada at that time had a split head office, Toronto, Montreal, and their finance department was in Montreal. And so here I am. I come back to Canada. I'm working in my hometown, which is cool. And I'm working directly for the CFO at the Royal Bank of Canada. Now, this is 1988. And if people remember, if they're old enough, and if they're not, I'm going to tell you, this was a time when the commercial banking system was suffering globally from Latin American debt. Okay. Every single major money center bank in the United States and five of the six in Canada and all sorts of European banks had lent money to Latin American countries in US dollar denominated loans. And because of a strong US dollar and weak South American countries or emerging market nations called lesser developed countries, LDC, there was a ton of bankruptcies to the extent that Mexico, Brazil, Argentina, Chile in South America, but Philippines, Vietnam, there were 44 lesser developed countries that went bankrupt. And the average trading price of their debt was 25 cents on the dollar. Now, this was a huge problem, as we'll go into, but at the time, Treasury Secretary Nicholas Brady sent out a proposal to the global banks to accept a debt restructuring from Mexico. It was called the Brady Bonds. You guys can look it back up. And it was a request, if you will, or a initiative by the Treasury Secretary to get the banks out of trouble, but also skate Mexico on side by being able to relieve or forgive a bunch of their outstanding debt. Okay. So the average trading price was 25 cents on the dollar. And I said, well, before I go right into Mexico and examine the Mexican situation, why don't I look at the entire Royal Bank portfolio? And it literally took me less than 2 hours to figure out, oh my God, we have a huge problem. Because the Royal Bank of Canada had $4 billion. Sounds like a piddly amount of exposure today with the trillions that are thrown around, but this was $4 billion of lesser developed country debt that was trading at 25 cents on the dollar on average, which means they had to write down $3 billion. Again, it doesn't sound like a lot, but at the time it was $3 billion, a write-off, in order to bring the value of the loans to the trading value of the market, reflecting the loss that they should take. Well, if you did that exercise and had to write it off against the book value of equity of the Royal Bank of Canada, remember, assets minus liabilities equals book value of equity. The book value of equity was vaporized. Royal Bank of Canada was insolvent in 1988.
Okay, are those synonymous though? Is insolvency synonymous with, I've never considered a bank not having any book value or negative book value, but insolvency in my experience is, can you meet your obligations as they come due? So are we talking about the bank being on the brink of collapse, or are we talking about an accounting anomaly? It's
the first step. Don't forget, so it's an open market evaluation of what the ability is of the bank to do this. But the first thing to realize is if you're holding something on your balance sheet valued at 100 cents on the dollar and the market's trading it at 25 cents on the dollar, you're supposed to mark that down to reflect the fact that you made an idiotic investment at 100 cents on the dollar, and now you can buy more of it at 25 cents on the dollar if you want to. But don't try and hoodwink your investors by pretending it's still worth 100 cents on the dollar. As an aside, every single commercial real estate property in North America has the same problem right now, held on the balance sheets of pension funds and banks, because no office building has not lost far more than the value that they have it marked on their portfolios right now. You're seeing this play out with Blackstone REIT, okay? Blackstone private credit lending in the US has gated their fund because they realize they're mismarked and they're not allowing investors to get out. But come back to 1988
just
with
me.
Stay there
for 1 second. And I see how 88 and this time are exactly the same, and how that supports your Ponzi scheme, which you're going to get to. But are you saying that the Blackstones of the world right now are not required under IFRS or whatever it is, it used to be GAAP, to market those real estate holdings?
Okay, yes, they are, but the point is they don't. And secondly, where do you mark them? Because cap rates have gone up, which means multiples have gone down, but nothing is trading. So what do? Bring it all the way down 40%? Well, you can't do that. But the point is, if you don't bring it down, they had been out there telling people they were still up 10% year on year, and people are like, okay, get me out. And they are like, oh boy, if we get you out, it means we have to sell something at which there's no bid, and we don't want to have to mark down our portfolio. So you see how this always works in an illiquid market.
So it's Groundhog Day. So finish your story about 1988, because it's happening right now.
It's always happening, David. Okay. And this is why I say it, that fiat is part of the Ponzi. But I do a back of the envelope calculation. I go, holy smokes, we're in big trouble. And I go to my boss, the CFO, great guy, Emil. And I go, Emil, we have a big problem. And he goes, I know, don't tell anybody. And I'm like, what the absolute F? I mean, like, I am a 27-year-old.
You said you be yourself.
I am a 27-year-old kid, okay? And I'm like, I just spent 6 years in school, 4 years at engineering and 2 years at school in the US to graduate and come and work at Canada's largest bank and realize it's built on sand. What a fucking joke. But I'm not going to be able to run out to the Wall Street Journal and tell them this. I mean, I'm a 27-year-old kid, and they're going to say, kid, just get the fuck off, okay? And other guys are going to say, well, every single bank is in the same situation, so, don't tell anybody. So anyway, that could have been my indoctrination to why the fiat world is a Ponzi. But let's make sure we understand that the fiat world being a Ponzi starts with commercial banking. And commercial banks are set up such that for every $100 of loans they make, they only hold $4 to $6 of equity capital, and the other $94 to $96 on the $100 of loan is made up of depositors' money. Right. Yes, true. That's called leverage in the banks. They are levered 25 times. 25 times 4 equals $100. So when they say the bank is leveraged 25 times, it's accepted. The problem is, how many times does a bank make a loan, like they did to Latin America, where the value of the loan falls far more than 4 cents on the dollar? Let me tell you, it happens like a bus. It comes around on a regular schedule where the global banking system is regularly insolvent. Okay, I've lived through 4 of them. Now stop. I don't give a shit if you're 25 years old and you think you know the world. You got to sit in a risk chair and you got to understand what happens when things go no bid. And risk off means prices fall, means if you are holding a loan that used to be really good and it falls more than 4%, all of a sudden you vaporized your notional equity capital against that loan. And what you hope happens is that not all of your loans go bankrupt at once, because if they do, a bank is done. It's toast, it's over. And people say, yes, I can sort of understand that, but the banks are too big to fail. The Canadian government would never let Royal Bank of Canada fail. And I'll say, by and large, true. But how does Canada protect against that? And it's very simple. It's this printing money. And the ability to print money is very good as long as you don't abuse it. The problem is every single politician always abuses the printing money machine because it allows them to stay in office longer. It allows them to smooth out COVID crises. It allows them to smooth out great financial crises. It allows them to smooth out long-term capital management idiot financial policy run by a Nobel Prize winner who levered his fund on Wall Street 100 to 1. Okay, it all starts with leverage, and this fucking fiat Ponzi is built on leverage run by people who are trying to milk the system like Jamie Dimon for the benefit of his large house on, I don't know if Jamie has a house on Long Island, but I'm pretty sure he has a top-notch golf course somewhere membership, and he's playing the fiat Ponzi and trying to pull the wool over everyone's eyes. They don't teach you this in school because they can't. If they did teach you this in school, no one would deposit their money in the banks. You get it? It's pretty simple. So it starts with education. You need to understand that leverage is the problem, but the entire system is built on leverage, i.e. credit, and therefore the value of your fiat money will always debase. It's 100% certain mathematically that fiat money will debase. If you don't believe me, look back 100 years and realize that the US dollar has lost 95% of its purchasing power over the last 100 years. And why is that? Because they print money to solve Latin American debt, long-term capital management, the great financial crisis, now COVID. They can't get out of it. They are in a debt spiral that cannot be solved mathematically. And since I'm an engineer and I believe in math as the base layer of everything, including language, I always rely on my math to tell me what to do. And since total global debt has reached a point where it's mathematically impossible for total global debt to get paid off by the size of the economies around the world, it's just the spiral will increase and increase, which means they have to continue to print money to solve the debt spiral. And I don't want to get too granular with you people, but that is a fact of mathematics. And if you don't understand what I'm saying, please don't manage your own money. You're too stupid, okay? If you haven't done this work, give it to a professional who understands what I'm saying and go and do what you do well, whether it's playing guitar or whether you're out there doing something really good. It shouldn't be managing your own money because you're too fucking stupid to understand what I just said. So I don't want to embarrass or insult anybody. There's lots of people that are really good at other stuff besides financial risk management. Give it to a professional like yourself, Dave, who understand what I'm saying. And I'm not saying go all in. I'm saying don't own zero. It's that simple because Bitcoin is your insurance.
Okay, so stop here for a second. Because when you talk leverage in the banking system, I get a little mixed up. And I just want to go back to this idea that inflation is built into the fiat money system. And when you say that government actors are printing money to get reelected, that is human nature. The more money we print, the more value you lose that you're holding. Your savings are losing value. Safety's done the math. It's like 7 or 8 or 9% a year. So we call that at my shop, there's direct taxation, which is the 54 cents that you give to the government. That's direct tax. But there's this other more insidious one, indirect tax. And that is the inflation that is absolutely inherent in the fiat money system. And I think you're going to agree and explain Bitcoin solves the constant inflation problem. And that's the hook for everybody. If you don't do anything, if your allocation is zero, your wealth is going down by 7 or 8% a year, whatever the inflationary pressures are. Right? Fair?
That is. Now, don't forget there is cost price inflation and there's monetary inflation.
Right.
And monetary inflation drives cost inflation, but they are not correlated one-to-one. So we are living today's price inflation due to monetary inflation, which occurred over the last 10 years because of the great financial crisis, okay? Every time there was a taper tantrum, meaning the stock markets started to get nervous, the Fed would come in and ease monetary conditions and therefore make easy money, increase the money supply. When you saw what happened in COVID, it is just asymmetric growth in the money supply. That leads to inflation over time. But what you need to understand is increase in money supply makes the value of assets appear to go up when measured in a diminishing value of a unit of account. So I hate to say it, but your house really hasn't increased in value per se. It's increased in price when measured against a unit that has decreased in value. That's the US dollar or the Canadian dollar, otherwise known as fiat currency or fiat money that is not backed by anything but trust. Trust that the government won't debase your currency. Except, guess what? Every single fiat currency in the history of fiat currencies always gets abused. Why? Because of power. Why? Because it's easier to push or kick down the can down the road than deal with the problems in the here and now. So I could run through all sorts of math with you to show you that the US government will never be able to pay off their debt. The only way they can satisfy that debt burden is by to continue to print more money to essentially pay the interest on that debt burden. Right. If that's not the definition of a Ponzi, I'm not sure what is. But that's why I call fiat the Ponzi. And you need to own hard assets. Now, here, this is key. Hard assets to hedge against that. Real estate's an example of a hard asset that has protected you as an investor against a debasing currency. What are other hard assets? Obviously, gold, silver, commodities, metals. Yes, all are hard assets. I believe Bitcoin is the best horse in the race, the hardest of all hard assets. But yes, I own real estate. Yes, I own, and when I say own real estate, not just my house, I own a couple of other properties that I value to be able to give to my kids over time, and I'm confident that the price of them is measured in a unit of account called fiat will be higher when I bequeath my kids those properties. Gold, yes, I own gold. Yes, I own silver. Yes, I own oil. The only thing I don't own are bonds, because bonds, where I spent 30 years of my career, are a fiat contract that are programmed to debase, okay? There will be a time I buy high yield bonds, but much like during the great financial crisis, I tend not to buy bonds at 100 cents on the dollar. I love to buy bonds at 25 cents on the dollar and watch them go back to 100 cents on the dollar when I've done my homework that you idiots who lent to somebody at 100 cents on the dollar made a horrible investment decision, but you're also making a horrible investment decision selling them at 25 cents on the dollar, because that's panic. That's when you want to puke, and that's what the market does. So here's a crazy story. Why did I leave Royal Bank of Canada? Well, I actually told the CFO, these Brady bonds at 25 cents on the dollar are stupid cheap. We own 1 billion of them. We should buy more. And he looked me right in the eyes like every single other horrible risk manager does, is, well, no thanks. We blew our brains out at 100 cents on the dollar. Why would I buy more at 25 cents? You know what, Dave? Those bonds went to 140 cents on the dollar before they matured. Okay. So point is, you always have to be a risk manager. You got to manage risk according to the potential returns. And the reality was, when they were trading at 25 cents on the dollar, they were actually very low risk compared to their potential returns. At 100 cents on the dollar, when you initially made the loans, it was a dumb loan. But banks tend to make dumb loans. Bubble markets tend to make poor investments because everything's mispriced. Right now, real estate is in the process of a huge repricing. Commercial real estate in particular in downtown Toronto, there will be some buyers that actually buy it at the proper price, not the guys who bought it a year ago or who funded it a year ago at the wrong price because everything was a bubble. But it's basically driven by central bank policy of easy money versus tight money. Right. So once again, own hard assets. It doesn't have to be all Bitcoin, but if you buy the thesis and you don't own Bitcoin, I believe Bitcoin is the best horse in the hard asset race. Fixed supply, portable, divisible, not centralized. This is the key. Nobody controls Bitcoin. There's no centralized or CEO of Bitcoin. So don't confuse crypto with Bitcoin. There's only one digital asset that matters. It's called Bitcoin. The other ones are scam tokens, okay? You can tell me all you want about Ethereum and the smart contracts. It's got a CEO. His name is Vitalik. The guy is a squid, okay? He may be fleecing people, but don't, for 1 minute, accept that as mine. I own it. I own it, Bitcoin, because it's the only digital asset that hedges against the fiat Ponzi. Ethereum, Vitalik cannot even tell you what the supply of Ethereum is. Well, as far as I'm concerned, that ain't a mark of scarcity when you don't even know what the supply of Ethereum is. So I only want to talk about Bitcoin. If you own other shit coins, good on you. I don't think you're making the right investment relative to Bitcoin, which is the only pure use of blockchain technology there is, and the only truly decentralized digital asset. So full stop. I own Bitcoin because it's a hard asset, and I'm concerned about the fiat Ponzi. If you want to talk about other altcoins and everything, go ahead. I'm not your guy. At the end of the day, the biggest problem the world has is fiat money. If you want to speculate in altcoins and everything like that, make sure you own more Bitcoin than any altcoin you own. But I'm not going to tell you how to spend your time. Understand that Bitcoin was created in the great financial crisis to hedge or to provide insurance against the fiat system blowing up again. Because I've lived through 1988, it blew up. 1998, long-term capital, it blew up again, had to be bailed out. 2008, man, it was really over, let me tell you, in 2008. That was pretty scary. You talk about wanting to puke in a bucket. I'll talk to you about going to work in March of 2009 on the train and literally thinking it's over. Like, it is seriously over.
September 18th, 2008, when the overnight broke the buck. I mean, nobody was talking about it.
That wasn't the scary part. It even got worse. It got worse than that, Dave. Like March 2009, when the S&P hit 6,666, okay, the devil's number, it doesn't matter. It was over, okay?
Let's stay here for a second. Stay here for a second. It's almost a counter argument. I can hear our listeners saying, yeah, but it's like a Monopoly game, man. If they bail them out every single time, let's just play the game. They're going to bail them out again.
Okay, I'm not saying don't own stocks. I'm not saying don't own stocks. Stocks are a form of a hard asset as well.
Yeah.
Understand, though, that stocks go up because the unit of account that stocks are being measured in, again, $1, that goes down. Now, the only stupid thing you can do is lend the government 100 cents at time 0 and take 100 cents at time 10 years back as payment and think that you earned, your 4% risk-free return on your bonds and realize that the $100 you now have 10 years down the road is worth about 65% of your initial investment. So that is the stupidity.
Do it the other way. Borrow soft, invest hard.
There was a time when you should be borrowing, but here's yes, only when rates were low and you're buying the house at the right price. The problem is when rates are low, everything tends to move up until they raise rates and then prices move down. And if you didn't lock in your funding price, 60% of Canadian mortgages are variable rate. 60% of mortgages in Canada right now are really getting squeezed. 60% of mortgages, if they turned around and tried to sell their house right now at last year's price, guess what? There's no buyers at those prices. So it always moves as a function of the US 10-year rate. The US 10-year rate will set the price for everything in the world, okay, over time. And that's why the US central bank is the most important lever in the entire system. And that's why everybody lives and breathes Jerome Powell, current chairman of the Federal Reserve, every thought on where he thinks the price of money is going. The reality is, I don't want to listen to an old, stupid lawyer like Federal Reserve Chairman Jerome Powell tell me what the price of money should be. I'm a freedom guy. I like open market determinations of the price of money, supply and demand, not engineered or manipulated by a central bank. Hence, I love Bitcoin. So I've come on down pretty hard. I don't want people to hate me. I'm fine with people hating me, but don't hate me because of the message. That is the message. If you don't understand the message, you haven't studied financial markets well enough. And if you want to live in a bubble and pretend that it's all good and that every single politician wants what's best for you, I would just suggest you're living in a world that doesn't reflect reality, okay? There's a lot of people out there that don't have your best wishes in mind. Remember, I come right back to it. 85% of the world are takers and only 15% are givers. And then when you go to Wall Street and Bay Street, it's like 99-1. So don't overthink things, people. You need to have insurance against the system, okay? It's the system. It's not you. It's the system. You need insurance. It's called Bitcoin.
Okay, so somebody's sitting here listening, and I'm trying to get, and I deal with them every day. They're successful in other endeavors. They just haven't had the time or taken the time to go deep on Bitcoin. And so I think the point you're making is, look, inflation is here to stay, has always been here. We're inflating the money supply and prices are inflating. And if
That's
you do
correct.
something about
Yeah.
that, you're going to get a decrease in your wealth. So there's the corrosive thing that's going on. So you don't have to necessarily buy a conspiracy theory or anything, but you have to know that there's a corrosive
That's mathematics. You just have to
There
learn
you go.
math.
Right.
It's math.
So-
it's pure
so how
mathematics, and you
How
can't
does
mess with
Bitcoin
math.
solve it? How does Bitcoin solve it? And what if I'm sitting here saying, well, this guy's right, and Bitcoin's kind of cool, but unless everybody adopts it, it's just going to be this little side hustle, which right now.
First of all, everybody is adopting it.
Yeah,
okay, so everybody is adopting it.
Yeah.
Okay, so that's it. Now, look, this is not Greg Foss talking. This is Fidelity Investment Management talking. Okay, one of the world's top 5 investment managers who's done research that compares the adoption of Bitcoin to cell phone adoption and the adoption of the internet. And in both cases, the adoption of Bitcoin is faster than the adoption of those technologies. And they've set a price curve based on that adoption where they see the price of Bitcoin over $1 million US per Bitcoin within the next 7 years. And here's the crazy part, over $1 billion per Bitcoin by the year 2040. $1 billion US. Okay, this is not me. This is Fidelity. Now, take it with a grain of salt because I'm not quite that bullish. My price target is only 2 million US dollars per Bitcoin in today's dollars. Now, listen to me, people. That's in today's dollars. So in 10 years, it could be far higher than 2 million. Yeah. The point is, I've done the math by breaking it down according to global financial assets. It's a debt credit default swap metric. I don't want to get too granular with you guys. I wrote a 40-page paper on this. That's been quite, it's how I got my fame on Twitter and being invited to all these places to talk. Why? Because I'm a credit guy. Credit runs the world. So you got to value Bitcoin with a credit lens. And those are the guys that are going to value it the best. And I'm just telling you, when something that I value as trading at or is worth, now it's not trading there, I think its worth is $2 million and it's trading at under 20,000. Well, I can do a probability analysis and I can say, if I think it's worth 2 million and it's trading at 20,000, the market's telling me I'm having a 1% chance of being right. Correct, Dave? 20,000 divided by 2 million is 1%. And I'm not 100% certain that I'm going to be correct on my Bitcoin price target, but I'm way higher than 1%. Okay, you stupid trolls, understand it's a game of probabilities. And that's my price target. And that's why I have no cares whether Bitcoin trades from 17,000 to 15,000 before it goes to 100,000, because you're getting too smart. You're overthinking things. Yeah. You just need to own some. And you don't need to own 100%. You just need to own more than 0. Now, in the case of myself, I own over 20% of my net worth in Bitcoin. And I'm fine with that. First of all, I got involved in Bitcoin when it was under $1,000 US per Bitcoin. And you're going to say, Foss can talk his book now because he got in and it's up 20 folds. Hey, guess what? It's actually a better risk-adjusted investment today than it was when I first got involved in it. Okay? And that's how you have to look at things because the information has changed. Because I got involved in Bitcoin before we had idiot governments that responded to the COVID crisis. Whether you believe in COVID or not, I'm not going there. I'm just saying they responded to it by printing more money than has ever been printed in the history of money printing, which means...
Well, they did more than that. And I want you to go here. They did more than that. They confiscated people's bank accounts. Right? Okay,
well, that's dangerous for me because yes, they did. Well, let's stay away from me because yeah, they did. They did. And that's part of the next stuff that's coming too, Dave. But look, I wanted to talk about this from a risk perspective of managing risk versus returns. True. When your bank can confiscate your own money, then you have a problem with custody. And that's why self-custodying your own Bitcoin is the perfect solution and insurance against government overreach. Okay. In 1933, the US government decreed that the citizens of the United States had to give all their gold to the government. Go and try and make the citizens of the world give all their Bitcoin to the government. It's impossible. The government can't figure out who owns it. And most
Because they
importantly,
can't
you
confiscate
own it
that.
with a seed phrase in your head. So I'm 60 years old. If you guys don't have comfort with what I'm saying, you got to learn. And if you can't learn this, get your kids who are very comfortable with the iPhone to teach you how to self-custody some Bitcoin.
Right.
Okay. And that is your insurance policy. And, you know, I'd love to be in a room drinking beers with you guys because I have a feeling your client group get what I'm saying. Okay. And then they'll say, I'm too scared to use the iPhone. And I'm like, get over it. Get your kids to do it. Understand that there's opportunities and various ways of investing in Bitcoin, whether you do it on the exchange, in an RSP, a little bit, or you do it with self-custody. I own Bitcoin 3 different ways, and all of them have varying levels of true risk to me, my custody versus owning it in my RRSP, where I have tax advantages by owning Bitcoin in your RSP. Of course, I'm going to take advantage of that, but I'm not going to hold it all that way because there's a chance that they freeze my Bitcoin accounts at TD Greenline. Why? Well, they've done it because people who supported, you mentioned, the trucker convoy, had their bank accounts frozen. That is a problem with centralization. So don't store your decentralized asset at a point of failure, which is run by a centralized institution. So all of this is part of your risk management portfolio. I don't want to talk about conspiracy theories.
Right.
Truth is, it protects against some of them, though, too, because it's not a zero chance that it could come. I'll just finalize it by this way, Dave. 10 years ago, if you had asked me what the chance was that a Canadian government would freeze the bank accounts of Canadian citizens, I would have said it's not zero, but maybe it's like, I don't know, 5% chance. Fast forward 10 years and it's happened with 100% certainty.
Right. Okay. So 2 things about that. One, all of those kinds of decisions do end up, whether it's monetary or fiscal, inflating prices. And the challenge with that, if you're not already asset rich, if you're not already rich, it's okay if you're already rich because prices get inflated. But if you're just I don't know what the word is, more normal human being, and you have a job that pays you 60.
No, 90% or 80%, 80% of the population. So yeah, let's be, 60% of the US lives paycheck to paycheck. Yeah, they get pummeled.
And
exactly.
So those people are being hurt by this fiat monetary system, right? Like that's the big message out here is that system has to go by the wayside. Now, so let's go to this point. If I'm sitting here listening to you, I say, well, okay, first of all, I don't clearly quite understand how Bitcoin solves all these problems he's talking about because there's still going to be leverage, there's still going to be a banking system. And the second thing is, my gosh, if it's going to disintermediate the central governments, if it's going to take the monopoly over money away from them, they're never going to let it happen. So why would I buy this asset if it's never going to see the light of day?
Okay, again, you're overthinking. Okay, are you certain that's the outcome? What if there are some governments that embrace it because, like El Salvador, they see it as the only solution? Then you're like, I want to get on side with these guys. And by the way, there's a very smart kid in the United States. His name is Jason Lowry, who's working for the U.S. Space Force, and he is pitching the United States buy Bitcoin for their treasury because, as he says, they're not trying to win. They're negotiating their surrender. Okay, this is hilarious, and this kid's a very smart kid. But listen to me, Dave. Don't be too smart by a half. If you are 100% certain the way that the world is going to work out, you're fooling yourself. You have to play the probabilities. So if you told me that the governments were going to ban Bitcoin, I'd say try it and then watch the price of Bitcoin go higher, not lower, because people will realize, holy shit, they're banning my only chance of getting ahead of the system. Because you see, when you play by their rules and they bring in central bank digital currencies and they tell you how you can spend your own hard-earned money, they have control over you. But if they try and ban something that they can't control, it will create more demand for it. You see it time and time again in history. And again, I'm not saying put $100 of every $100 in Bitcoin. I'm saying put a portion of it in case I'm right. And you can't tell me that you see the world with 100% clarity because anyone who thinks they do is not a good risk manager. The only thing that is 100% certain in any financial analysis I've ever done is that fiat money will debase. That is 100% certain
and that has
because
been
of the
happening for 100
mathematics.
years, right? Like that's been happening. You don't
And it
even
will
need to
accelerate.
project the death spiral.
It will accelerate because it's now worse than it's ever been. Okay. But I feel like we're going circular here a little bit. Honestly, if your client base has listened to as much of my drivel as they have, and they still haven't been convinced, there's not much I can do for you, man. Go and, or lady, please go and, continue doing what you're doing. And why don't you just put all your money in bonds? Because you might as well lose all your money for the rest of your life. You're part of the Fiat Ponzi. So I'm not, there's only so much of my breath I can waste on people that just aren't going to listen. And I have 20-ish% of my net worth in Bitcoin. Okay. That's a lot. I just want you to get between 0 and 5% of your net worth in Bitcoin. That's all I'm asking. Then you can worry about the other 95% of your portfolio that, in my opinion, is not as good as Bitcoin to hedge against this. And if you're not worried about it, you failed mathematics, okay? And I just can't help you. I
love it. Let's go to one positive place to shut her down, which is to say you flew to Madeira, you talked to a government, the president of Madeira. If I was running a country, a small or medium-sized country, I would shove it all into Bitcoin because it's self-fulfilling. Once everybody knows that, the price is going to go up and so on. So let's talk about what might be the catalyst that happens overnight.
Okay, all good. So yeah, I did go to Madeira, but I also went to El Salvador where it's really happening much faster than Madeira. Okay, so Madeira, to put things in context, is an island of 250,000 people. And El Salvador is a, one sec, sorry about this. Some telemarketer, of course, is always calling when. So basically, El Salvador is 6 million people. And El Salvador has a GDP of 28 billion US dollars annually, 28 billion US dollars, which quite honestly is not even the GDP of the greater Miami area. Okay. So while El Salvador is a bigger country than Madeira, it still doesn't really matter on a global scene, but they do have a great president who has seen the future. Now, you said go all in. Well, he hasn't gone all in. All he's done is bought a couple of 50 millions of dollars worth of Bitcoin. And all the press has said is, oh my God, he bought it when it was at 40,000. Now it's at 20,000 and he's lost half his money. No, we're not doing the math. El Salvador has a $28 billion economy that last year grew 10% because of increased tourism because of Bitcoin, as well as reduced credit card fees and better remittances. Here's the fact, okay? You know that I'm a partner in 8 bars in Montreal, and we're a really good bar owners. And we make about 14 cents on every dollar that we sell. That's our profit margin. And that's a shitty business. Like Apple makes about 50% margin. We make 14. So there's a reason that bar owners, it sounds sexy, but it's not a great business. And we're really good. And if someone takes out a credit card to pay us, we have to pay 2.5 cents merchant fees on every dollar, right? So our profit margin goes from 14 cents down to 11.5% in North America. Do you know what credit card fees, merchant fees in South America are?
No idea.
8%. 8%. So if you're a good, there you go, my friend. So how did the revenue of El Salvador increase? Predominantly tourism, but also removing the rent-seeking intermediaries like credit card companies. Oh, that includes JP Morgan. Yes, it does. Shut the fuck up, Jamie Dimon. We understand why you hate Bitcoin. It's removing one of your most profitable sources of revenue. But stick with me. $28 billion, they grew by $2.8 billion or 10%. Let's say that the Treasury was able to get a 20% tax rate on that. 20% tax rate on 28 or 2.8 billion is $560 million. Right. The tax revenues increased $560 million and they lost 50 million on their Bitcoin holdings. They're still up $500 million. Please do the mathematics. Don't read Reuters and don't read all these other publications who want the experiment to fail. Look at the mathematics and then ask yourself, How is it possible that El Salvador bought back hundreds of millions of dollars of their own debt in the open market at fractions of $100 per bond? They bought it at 50 cents on the dollar because they were ripping off the stupid lenders who lent to them at 100 cents on the dollar and now are selling it back to them at 50 cents on the dollar when the lenders haven't even done the math as to how good the economy is actually doing in El Salvador. They're listening to the IMF and they're listening to all these other WEF funded institutions that are saying it's not working in El Salvador. I'm sorry, just measure it by the top line. It's up 10%. So if you run a company like that, you're going to make money. You run a country like that, you're going to make money. That's how risk is managed. That is the facts. And El Salvador is only 6 million people. Imagine if Canada or even Alberta was smart enough to start doing this with their treasuries based off of the natural resource energy that exists in Canada. Why do I say that? And I haven't even gone here. I'm an engineer. I think of Bitcoin as digital energy. Okay. Wow. I could open up a whole new rabbit hole for you guys, but I'm not going to go there. But if Canada learned to monetize its energy infrastructure with Bitcoin, rather than accepting debasing US dollars for their valuable natural resources and actually accepted Bitcoin instead, we would change the future for our children. And so all of this comes back to the Bitcoin narrative. It's a superior form of storing value. It's digital energy. It will be accepted in the next 10 years by Russia as payment for Russian natural energy. And when that happens, the US dollar loses its petrodollar status in the world. And oh my God, you'll see a price of Bitcoin that's measured with hundreds of thousands of dollars rounding error, not tens of thousands of dollars of rounding error. Protect yourself. That's all I wanted to say to you people. Risk management is an IQ test, okay? And there's so many people that haven't done the work and they think they're the smartest people in the room. Guess who the last smartest people in the room were besides Enron? It was the donkeys at long-term capital management that levered themselves 100 to 1 because they had a Nobel Prize winning mathematician, or excuse me, options pricing guy on the board. Okay. Doesn't work that way. Fisher Black, you know, I'm afraid you got to pay the freight. If you think you're the smartest guy in the room, the market will take advantage of you. Risk management is a process. It's about admitting when you're wrong. It's about changing your position as the information changes. And Fidelity is no, you know, come by night, fly by night institution. If they have a price target of $1 billion US per Bitcoin, I suggest you think about that for 1 second rather than just dismissing it as poor research. People who have done no research on Bitcoin are the ones that are at risk. If you do the research, I've yet to meet somebody that doesn't admit, yes, this does have its asymmetric upside. Once again, and we'll sign off here, asymmetric investments define careers. Amen. This is the best one I've ever seen. Good luck to you. I'm wearing my Canada red. Yeah, Canada's in a heap of trouble. We have a debt burden that is the worst in the world.
Really?
Okay. Worst in the world on a percentage of GDP basis. Get protection for the kids. Thanks so much for having me.
Thanks for what you're doing, Greg. Honestly, beautiful, beautiful. And we'll get people.
Great to meet you yesterday.
All right, man.
Great to meet you. Is that your logo?
That's RJ Red Jacket. You got it. Thanks for the promo.
Love it, man. Thank you for having me.
Thanks very much for listening. We'd love to hear from you. If you have questions or maybe you have something to add to the conversation, we're at redjacket.ca. And on the website, you'll see the phrase relationships matter. We really believe that and encourage you to start one with us. Thanks again for listening.